He is holding postgraduate diploma in digital business from Columbia University and MIT Solon. He is a convener with the Ghatkopar Knowledge Center of the ICSI. He is a co-opted member of the Research and Publication Committee of the Chamber of Tax Consultants. He has addressed the Institute of Chartered Accountants of India and study circles of WRC of ICI on a range of topics and has been a faculty before various bodies, including the IIT Indore. He has contributed articles for professional bodies, including the CCGRT of ICSI and Chamber of Tax Consultants. With this, I warmly welcome you, Raj sir. And without wasting any further time, I would request you to start with your session, sir.
Please share the moment.
Oh, sorry.
Aman.
Yeah, sorry.
Thank you. Thank you very much. Thank you.
So you can start with your
Yes, sir, please.
Yes, sir.
You can start sharing your screen.
Is this visible? And I'm audible clearly, right?
Yes, both.
Okay, sir. Thank you. Thank you very much, dear coordinators of the Borivali Central CP Study Circle of WRC of ICI for inviting me on to speak on this topic. And just like the keynote address, CS Nehal Shah, he briefed us all about the latest updates with the ROC and the latest which are also proposed in the forthcoming period. So whether it is about the new MCA version or whether it is the CSR spending which has been made mandatory, or whether it is the MSME new regime. So that has laid the framework for today's session. So let us understand further and let us learn more about the latest updates. So the first session was to be taken up by CS Kaushik ji, who could not make it because of a personal emergency. So I'll be first taking up the session on the latest updates under the ROC for the Companies Act, the notifications, the orders, circulars which have been issued, and thereafter I'll be continuing with the annual filings and the deadlines. So so starting with 1 second. This is the overview. So this part of the presentation would cover the MCA circulars, the notifications, and the ROC and MCA orders under the Companies Act. First, very briefly about the Ministry of Corporate Affairs. The Ministry of Corporate Affairs is a government ministry, and it is concerned with the adjudication, administration of the laws which are applicable to the corporates, including the body corporates, the companies, and the limited liability partnerships. So the laws that fall under the purview of MCA are the Companies Act 2013, the Companies Act 1956, the Limited Liability Partnership Act, the Insolvency and Bankruptcy Code, and other allied acts, regulations framed therein. The current Minister for Corporate Affairs is respected Srimati Madam Union Minister, the Union Finance Minister Srimati Nirmala Sitharamanji. The Minister, the MCA from time to time issues circulars, clarifications to clarify the provisions of the Act and the rules made thereunder. Considering last 2 years have been exceptional years due to the pandemic of COVID-19, so there have been many ongoing basis, the notifications, circulars, amendments which have been introduced by the MCA pertaining to companies and LLPs. There have been, in many cases, in many instances, there have been certain relaxations which have been issued. There have been new regimes which have been introduced, whether for small companies or OPCs. There has been a complete new regime for CSR, which we will deal with. So the ministry has been issuing ongoing basis, and just like it is the case with income tax, with the goods and services tax, the ongoing notifications, we have to be updated with them, and we have to ensure that whatever necessary compliances are there, so that are fulfilled. First part is the circulars which have been issued recently. During this year, 2021, there have been certain important circulars which have been issued. The first one is this Circular 8 of 2021, dated 3rd of May 2021. Basically, it deals with the gap, the interval between the two successive or consecutive board meetings. As per the Act, the interval between two consecutive board meetings is 120 days. But for the first 2 quarters of this current financial year, which is 2021-22, first 2 quarters, that means for July 2021 and the quarter ending September 2021. For these 2 quarters, the intervening gap between two consecutive board meetings was extended to 180 days. So that 60 additional days was provided owing to the difficulties faced in COVID. So this relaxation has ended on 30th of September 2021. Next is the clarification with respect to this the companies whose AGMs were due to be held in the year 2020 or due in the year 2021, and to conducting the AGMs on or before 31st of December 2021 through video conferencing or other audio visual means. So this relaxation was introduced in 2020 because of, again, the pandemic of COVID-19, wherein it was allowed to convene the general meetings, whether it's the annual general meeting, whether it's the extraordinary general meeting. Such meetings were allowed to be convened via audio-visual means or via video conferencing. Circulars were issued, and the period which was there, originally it was in 2020, and eventually it was extended till 31st of December 2021. But now further 6 months it has been extended. So till 30th of June 2022, the meetings, including the extraordinary general meetings, the annual general meetings, can be convened till 30th of June 2022 via the video conferencing or the other audio-visual means. There are certain other circulars issued. This is another. So there were 2 circulars which were issued. One was about the AGMs and one was about the extraordinary general meetings. So for both, all the general meetings which a company proposes to convene in this period can be convened through other audiovisual means and through video conferencing. Of course, the provisions of the Act, the circulars are required to be followed. The provisions, some basic provisions, including that having this two-way video, this two-way communication enabled in the platform basically which we use. So two-way communication has to be enabled. The link for joining has to be clearly mentioned. The link for joining has to be opened at least 15 minutes before the scheduled time of the general meetings, and also has to remain open till 15 minutes after the conclusion of the general meetings. The provisions relating to voting of the meeting, whether relating to addressing the queries, all those provisions are to be followed. But this extension has been given till 30th of June 2022. Then there is an extension of last date of filing post audit report to the board of directors. This circular was issued on 27th of September 2021, wherein this CRA 4 form, which the company is to file with the MCA, that the due date of that form is 180 days from the end of the relevant financial year. So within 180 days from 31st of March, this CRA 4, the cost audit report, is to be filed with the MCA. This due date was extended till 31st of October 2021. So till 31st of October, there was no late fee. If still this form is to be filed yet, then if you are filing it now, then applicable late fees would be levied under the Companies Act. Then there are certain notifications which have been issued in this year under the Companies Act. So let us also have a look at those. One is this omission of Rule 4 of the company's meeting of board and its powers Rule 2014. This rule, it's again very important amendment which has come, and it is a very important relaxation as well. Considering the current restrictions on travel, there may be directors of the companies which may be located not just at any corner of India, but also at any corner of the world. So this rule provided that financial statements, among other things, the financial statements and board report, who can only be approved at a physically convened board meeting. This was a difficulty, and in 2020, they had temporarily relaxed this provision that the financial statements could be approved through audiovisual means. But with this notification dated 15 June 2021, now they have completely omitted Rule 4. So the matters which are pertaining to the approval of annual financial statements, the approval of board's report, the approval of prospectus, the audit committee meetings for consideration of financials, including consolidated financials, and the approval relating to amalgamation, merger, demerger, acquisition, takeover. All these matters can now be taken up through audiovisual means. Of course, the relevant circulars and the secretarial standards need to be followed. The meetings need to be recorded, and of course, the board of directors and the committee members who are attending these meetings are required to state their names, their location from which they are attending, and they are also required to make a note that they are alone in the room and no one other than the concerned director or committee member has access to the proceedings of the meeting. These are some relevant provisions with respect to the audiovisual board meetings or the committee meetings which are to be followed. But this is a very important relaxation now for under the Companies Act. Next, a relaxation is for a OPC and a small company. So as we discussed at the start, there has been a kind of a new regime altogether, which has come up for small companies, for one-person companies. Of course, we will discuss the intricacies in the second part of the session. But as per this rule, Rule 11(1) of Companies Management Administration Rule, this notification dated 5th of March. Now, for a small company, for a one-person company, those companies are required to submit the annual return in the new form, e-form, which has been introduced, which is 7A. So for this, even for the current year, if we are filing this annual return for year ending 31st March 2021, then such annual return are to be uploaded in form MGT 7A. So this is a new regime in a way. We'll discuss more specific in the second part of this session. And the remark is that MGT 7 for companies other than OPC and small companies, and now MGT 7A, which is a new return for small companies and OPCs. And also with the same amendment, this extract of annual return has been omitted. So now earlier we used to have an extract of annual return in MGT 9, which was there, but which is now that requirement has been omitted. That extract of return is not required to be filed, and only now the annual return, which is MGT 7, MGT 7A, the annual return is to be uploaded on the website of the company. Here it is filing of annual return with the registrar, a copy of annual return shall be filed with the registrar with such fees as may be specified, and for Form MGT9 has been omitted. So next amendment deals with this compromise arrangements, amalgamation, amendment rules, which have been made effective from 1st of February 2021. So this, as per this, these rules basically deal with the scheme of merger or amalgamation under section 233 of the Act may be entered into. So basically, a new separate regime for such mergers and amalgamations have been introduced for startup companies. So wherein 2 or more startup companies can enter into a scheme of merger or amalgamation, or 1 or more startup companies with 1 or more other small companies. So in a way, this is also another like special regime which has been introduced. Of course, startup companies which are duly registered as startups, which are private companies, within 10 years of the incorporation. So all those conditions relating to registration as a startup have to be fulfilled, but this also relaxation can be made use of. And for the purpose of this sub rule, as it is written, the startup company means a private company incorporated under the Companies Act and recognized with the notification number GSR 127E dated 19th of February 2019, issued by the DIPPT. So the next, which is dealing with the independent directors. This amendment is dealing with independent directors. This is dated 19th of August 2021, wherein Rule 6, Sub-Rule 4 of the Company's Appointment and Qualification of Directors Rules 2014 have been amended. This basically deals with the qualification exam, which is the assessment, online assessment, which the independent directors have to clear. But there is certain relaxation which has been provided, which is in this first proviso, clause B. The following clause has been substituted, which is that in the pay scale of director or equivalent or above in any ministry of or department of the central cabinet or any state government, and having experience in handling the matters relating to commerce, corporate affairs, finance, industry, or public enterprises, or the affairs relating to government companies or statutory corporations set up under the Act of Parliament or any state act, and carrying on commercial activities. And the second proviso, which I think is more important and relevant for professionals, which are chartered accountants, company secretaries, cost accountants, which is that if you are an advocate, a practicing chartered accountant, practicing cost accountant, or practicing company secretary, and you have been in practice for more than 10 years, then such professionals would not be required to pass the online proficiency self-assessment exam, which is required for being appointed as independent director. So this is another important amendment which is for professionals. Next is relating to Schedule 5, which is the remuneration payable to the directors. So under the remuneration, the words or other director or directors shall be inserted. So applicability has been enhanced. So in case of companies having inadequate profits or losses, the remuneration can now be paid to the non-executive directors also based on the effective capital of the company. So here the addition of the words or other director or directors shall mean that non-executive director or independent director now also are covered under this regime. Another very, very important, significant amendment which has been made by the MCA pertaining to the financial statements is in Schedule 3. This notification is dated 24th of March 2021, wherein many new disclosures under Schedule 3 has been prescribed. There is changes. There are many, and we have dealt in this presentation with few which are very important For example, the shareholding of promoters, there is a detailed disclosure with it. Title deeds of immovable property which are not in the name of the company are to be disclosed. Disclosures regarding whether loans, advances in the nature of loans are granted to promoters, directors, or KMPs. So loan advances to the directors, KMPs, and their related parties also are to be disclosed. Whether the company whether they are now declared as a willful defaulter. The company is now declared as a willful defaulter under any law, regulation, or by any party, then also the same has to be disclosed. Utilization of borrowed funds and the share premium account has to be now disclosed. Relationship with struck-off companies, whether any transactions, whether what is the nature of such a relationship, the disclosures have to be made, and of course CSR disclosures as per section 135. This we will discuss the CSR amendments and certain FAQs as well in this session. So again, a new regime has been introduced for CSR, which is very important with effect from January 2021. The next amendment deals with one second. So this is this deals with this amendment dated 24th of March 2021, which is an amendment under the Companies Accounts Amendment Rules 2021, and also it contains additional disclosures which are to be made in the board report. So Rule 3 of this Companies Accounts Rules have been modified to include that with effect from 1st day of April 2022. The date is to be noted 1st of April 2022. Every company which uses accounting software for maintaining its books of accounts shall use only such accounting software which has a feature of recording audit trail of each and every transaction. Audit trail of each and every transaction, creating an edit log of each change made in the books of accounts, along with the date when such changes were made, and ensuring that the audit trail cannot be disabled. This is applicable for every company, including small, whether section 8, whichever you prefer. Any company has to maintain such a accounting software which gives the detail of an audit trail and also detail of changes made. Then there are certain disclosures which are added in the board report. The detailed disclosures are discussed in the second part of this session. The amendment here is the detail of application made before or any proceeding pending under the insolvency and bankruptcy code during the year, along with the status as at the end. So if any application is made under IBC, the same is to be disclosed. And the details of difference between the amount of valuation done at the time of one-time settlement and the valuation done while taking loan from the banks or financial institution, along with reason thereof. So these two disclosures are added. Next, there is the company's this specification of definition amendment, which has amended the definition of small companies. Now, this amendment was announced by the Honorable Finance Minister in the budget speech of 2021, and on the same day, this amendment was introduced. And we will discuss, of course, about more in detail about the small companies in second part of this session. The definition, the new definition which has been introduced is that now the paid up capital of 2 crores and the turnover which is 2 crores and the turnover which is 100. So that is to be checked. Okay. So next is the ROC Order which is issued, and in view of the pandemic, this ROC 2020 applicability was extended by the NCA instead of financial year 2020-2021 to financial year 2021-2022. So for audits, which would be for the financial year ended to 31st March 2022, the new CARO report would be applicable. And we have discussed a few relevant amendment and important changes which have been made in subsequent slide. So this also is to be taken into consideration, the amended disclosures under the CARO and the reporting under the CARO, and also this ROC order, which is dated 23rd of September 2021, which is the extension of time for holding annual general meeting for 2021. So this time has been extended for 2 months. So for companies whose due dates for convening AGM were falling on 30th of September 2021, now extension of 2 months has been given, which in effect is 30th of November. And for annual filing, all annual filings which are due to the companies are to be completed by 31st of December 2021. So this is the condition for 2021, which is a separate provision. Of course, while considering the due date of AGM, care has to be taken that section 96 subsection 1 is followed, and those two conditions, which is 6 months from the close of the financial year and 15 months gap between two consecutive annual general meetings. So that due date has to be, the earlier of the two has to be considered, and then 2 months of extension is to be counted. That care is to be taken. So as we discussed about CARO, so certain amendments which are now very important and applicable to the new disclosures of CARO are pertaining to whether property, plant, equipment have been valued, and if so, then whether they have been valued by a registered valuer, then the details have to be provided. Then whether there are any proceedings initiated against the company under the Benami Transactions Prohibition Act of 1988. Then whether the company has been sanctioned a working capital limit exceeding rupees 5 crores in aggregate during quarterly in aggregate during the current FY. If such a limit has been sanctioned, then whether quarterly returns have been filed to the bank as per requirement of the bank from case to case, whether company has filed any quarterly returns for the same, whether any loans advanced in the nature of loans granted during the year have renewed, extended, or whether any fresh loan to settle the overdues of existing loans to same parties. If there is any such case, then the details have to be given. And this clause is of course not applicable for companies whose principal business is to give loans. But this is again another important disclosure. And whether transactions which are not recorded in accounts have been surrendered or disclosed as income, and whether previously unrecorded income is properly recorded. Whether entities termed as willful defaulter by any bank, financial institution or lender, the same has to be checked. Whether term loans used for the purpose for which they are obtained, then details are to be given. And whether any loans are taken for obligations of a subsidiary, associate or joint ventures, then the details and nature of such loans are to be reported. Resignation of statutory auditor is to be reported, and also whether auditor has taken into consideration the issued objections and concerns of the outgoing auditors. From next year, this is also another important clause. On the basis of aging ratios and other information in auditor's knowledge and other factors, whether auditor is of the opinion that the company is capable of meeting obligations as and when they fall due within 1 year from the balance sheet. This is another call and in a way a judgment which auditor has to make on the basis of aging analysis, ratio analysis and information on record. So, very huge responsibility which the new order, the CARO 2020 has put on the chartered accountants. Excuse me. Then these two reporting which are under the CARO for the relating to CSR. whether in other than ongoing projects, the company has transferred any unspent amount to a Schedule 7 fund within 6 months from the close of financial year, that is by September 30 of the relevant year. This is an amendment which was introduced in January 2021. Carry forward was not allowed in CSR now, and if the spending has to be mandatorily made, and if not made, then the same has to be transferred to an unspent CSR account, which is the second point. Whether any unspent amount has been transferred to the unspent CSR account pertaining to section 135 subsection 6, that is by 30th of April, that fund has to be transferred if it is an ongoing project up to 3 years. And if there is no such project, then by 30th of September, the same has to be transferred to a Schedule 7 fund. That is the amendment under CSR. So let's just learn about some circulars which are issued under the CSR now. And also, yes, these were just the relevant points. There are many other amendments as well, but we have covered some which are of relevance and importance, which the chartered accountants are required to report on. Now there are some circulars which are issued. So this is like funds which have been introduced under Schedule 7. So one is for carrying out awareness or campaigns and programs, or published outreach campaigns for COVID vaccination. So if any such, basically these funds which are notified under Schedule 7 include all these. So whether there are like setting up makeshift hospitals and temporary COVID care facilities, whether creating health infrastructure for COVID care, establishment of medical oxygen generation, storage plants, manufacturing and supply of oxygen concentrators, ventilators, cylinders, and also so many activities relating to COVID-19 which have been included time and again by the MCA, and they have also included certain FAQs. So let's briefly also deal with certain FAQs which have been introduced by the MCA. So which companies qualify for CSR? So the companies with a net worth of up to 500 crores, turnover of up to 1,000 crores, net profit of up to 5 crores or more in the immediate preceding previous year. Then whether provisions of CSR are applicable to Section 8 company? Yes, it is applicable to all the companies. Every company is covered under CSR. How is average net profit calculated under Section 135? Whether profit before tax or after tax? The same is to be calculated as per provisions of Section 198, and whatever allowance disallowances are made, they have to be taken into consideration. Basically, these FAQs are also introduced by the NCA on 25th of August 2021, and all participants are required to check the same. There is a like major amendment, important amendment under CSR. Next, what is the meaning of administrative overhead? So administrative overheads can include like designing, implementation, monitoring, evaluation expenses, and they can comprise of employee cost, utilities, office supplies, legal expenses. Up to 5% of total spend is only allowed as administrative cost. Surplus arising from CSR activities shall be utilized only for CSR purposes. If a company spends more than the required amount, then yes, it can be set off against the mandatorily required 2% in the immediate succeeding year. Whether CSR expenditure can be claimed as business expenditure, then no, that cannot be claimed. The income tax has clearly stated that CSR expense is not a business expense. Therefore, it cannot be claimed. What are the tax benefits? And there are no specified tax benefits, but of course, there is a ATG1 subsection, the ATG1 deduction under the income tax for Clean Ganga Fund. If any donation is made, then 100% exemption is there. There is also a contribution to PM Cares Fund, which is eligible for 100% deduction under the income tax under section ATG. What actions are needed if the company spends less than the amount required? Then, as we discussed, either by 30th of April, you transfer it to the unspent CSR account if there is an ongoing project, And if not that, then by 30th of September, you have to transfer it to a Schedule 7 fund. And these new funds which have been introduced are to be checked. So 10th question, whether disposal of fund by the company to implementing agency for implementation of projects will be considered as spend under 135.5. It's that the company may fulfill its CSR spending directly by itself or through engaging an implementation agency. The implementing agency acts on behalf of the company, and mere disbursal of funds for implementation of a project does not amount to spending unless implementing agency utilizes the whole amount. Then, what are the penal provisions for non-compliance with the provision regarding transfer of unspent amount? Then it is a civil wrong, and company would be penalized like twice the unspent amount required, or 1 crore, whichever is less. And every officer in default, which will be 1/10 of the unspent amount, or 2 lakh rupees, whichever is less. Finally, what are the penal provisions relating to non-compliance with provisions other than section 135, 135, 135(6), then the provisions of 134 subsection 8 or general penalty under section 450 of the Act will be applicable. In case of non-payment of penalty within stipulated period, the provisions of 454 subsection 8 would be applicable. So the members are requested to check out the actual notification and CSR to get more clarity. So this brings the first session on legal updates to the end, and we will now continue the session with the annual filings and various deadlines.
Do we need any break?
No, I'm okay. If there is any questions, or we'll take the questions at the end. How is?
Members, please put your questions on the Q&A box. So Raj will take up at the end.
Okay, sir. So I'll continue with the second part of the session. Yeah.
Fine.
Thank you. Yes, sir. So, yeah. Regarding annual filings, the ROC annual filings and the deadlines. So, first question before we proceed with the annual filings is that why these filings are required? Because first it is important to get the context that why it is required, and then it will be like a flow wherein it will be easier to understand. So I like like we don't have the government's reply on it, like why they are required, but this is what I understand, and I would like to share. These are, of course, my view. The government's view can be different from my view. So they are a part of good governance, basically. The annual filings we'll discuss it in this part of the session, and they are a part of good governance, because we will see that at a different part of a year, different disclosures are required to be made to the government. Even if we check the unicorns, which have been the startups, the companies which have been identified as unicorns in this year, there have been 40 unicorns which have been only identified in 2021, and overall there have been only 79 or 80. Since 2011, 2012, there have been 79 or 80 unicorns, and out of these 40 unicorns, startups have been recognized in 2021 itself. A unicorn means a startup with a market cap of more than $1 billion. This is a huge sum, and really, I mean, the environment, the ease of doing business, good governance is the core of this. We have recently also seen some stellar startup listings, whether it is the 197 Communications, the Paytm, or the Nykaa, and there are more also in the pipeline. And there is this rule, which is the Turcon rule, which is the kind of a basis of all the corporate governance culture. And one part of that judgment which I have included is any outsider, that is a stakeholder dealing with a company, is entitled to assume that the internal requirements and procedures have been complied with. there will be many stakeholders, whether it is the creditors, suppliers, the customers, shareholders, employees, governments, so many. So they are entitled to assume that internal requirements and procedures have been complied with. And how to ensure that is through adequate, through good corporate governance is a means probably to this end. And I would also like to highlight at this stage the words of Shri Amit Shah, the Home Minister. Shri Amit Shah has very recently, just 4 or 5 days back, has told these words relating to corporate governance, and I'll just quote him very briefly. That he says that किसी भी देश का विकास मजबूत कॉर्पोरेट गवर्नेंस के इंफ्रास्ट्रक्चर के बिना हो ही नहीं सकता, क्योंकि कोई इन्वेस्ट तभी करता है जब सिस्टम पे भरोसा होता है, कोई इन्वेस्ट तभी करता है जब सिस्टम की ट्रांसपेरेंसी पे भरोसा होता है, कोई इन्वेस्ट तभी करता है जब गवर्नेंस की खराई एंड प्रॉम्प्टनेस पे भरोसा होता है. So we can infer that this is the view of the government which Shri Amit Shah has mentioned. So this is the importance and the disclosures which are to be made in the annual filings. These are a means to that end. To understand these annual returns which are due for filing, I have made a use of an analogy to understand it better. And considering that most of the attendees would be based in Mumbai, being Mumbaikars, I have made use of an example of a train. This is the train Mumbai local, which is, this is the photo of a Mumbai local leaving Churchgate station. This train is very unique. It makes this journey only once in a year, and all companies and LLPs, whichever way, they board this train at some point or the other, and also get down at various stops. So let's discuss how this train starts. Let's assume that this train starts this journey, which is once in a year, on 1st of April. So for 2021, this journey has started on 1st of April 2021. It will reach its first stop on 30th of April 2021, which will be the return of MSMEs. This form MSME 1, it's the return of MSMEs. So why and how this return has been introduced? Like at the start, Mr. Snehal Shah told about a new regime which is being proposed for MSME. So this is also one of the part under that regime. This is basically empowered, the government is empowered under Section 9 of the MSMED Act. This is the act governing all the MSMEs in India, the Micro, Small and Medium Enterprises Development Act. This act governs all MSMEs, and this Section 9 provides that government may take measures for development and promotion of MSMEs from time to time. So so this is also, I would like to cover this Section 15 and Section 16 of this act, MSMED Act, which states that basically if there are any dues to suppliers who are registered as MSMEs, then such dues have to be cleared within 45 days of the date of acceptance of such goods and services. If there is not cleared, 45 days, the date is also important. It's a date of acceptance of goods or services and not the invoice date. The both can be different. For example, for goods, probably your delivery challan that it is signed off, then that would mean that the goods are accepted. And invoice may be before or after that. So that also care has to be taken. It is 45 days from date of acceptance of the goods or services. So such dues to MSME registered suppliers have to be cleared. And if it is not cleared within 45 days of date of acceptance, then the same has to be paid to such MSME suppliers with interest at 3 times the market rate, compounded annually, with monthly rates, So For example, 10% is the market rate, then 30% interest would be levied on such payment, 30% per annum calculated monthly. The period of starting of interest would be the date immediately following the date agreed upon, that is the due date. Due date is 45 days from date of acceptance, or if there is any lesser date, then that lesser date is to be considered, but not exceeding 45 days. This form MSME 1 has been introduced under section 9 as we discussed here. So here, as per this, all companies have to file this return of dues to MSME 1. This return of dues to MSME suppliers have to be filed in form MSME 1. We'll discuss about the structure of the form as well. This is a half yearly requirement. So for 30th April, which is the first stop of this compliance train, the second half of the year 2020-2021 is to be considered. So dues to suppliers as on 31st March 2021 are to be disclosed by 30th of April in this form MSME 1. And Schedule 3 also provides for dues to MSMEs to be specifically disclosed. Also, I would like to add here that Schedule 3, of course, provides that trade payables are to be identified between dues to MSME and other trade payables. Also for LLPs, the limited liability partnership, in their form LLP 8, the separate attachment has to be mandatorily attached for dues to MSME. So this type of a protection has been introduced by government for wherein companies and LLPs are required to disclose. So just a brief this form MSME 1. So this is how it will look like. The basic details of the company will be input, and total outstanding amount due to MSME would be included. And this form from 1 to 99 entries can be included in one form MSME 1. So that means that 0 is not, so if there are no dues to suppliers, then form MSME 1 is not required to be filed. Nil return is not required to be filed. This is only when there is any dues. Of course, financial year is to be mentioned depending on the period of, as it is a half yearly return. So whether 30th April or the second half, so that will have to be mentioned. Name of the supplier, PAN of the supplier should be mentioned, amount due, and the due date is to be mentioned. This, which we discussed about this Schedule 3, the trade payables, which is currently there. So total dues to MSME is in this top half of this is the current, and the bottom half, which is the new disclosure, the aging analysis, which we discussed in the first session. This is with effect from 1st April. Then this type of aging analysis have to be mentioned, wherein the trade payables, dues to MSME and others, and disputed dues have to be mentioned in this type of aging analysis. Certain points to remember for this. This is that obtain confirmations from MSME suppliers. So like balance confirmation at the time of audits, you will now have to also obtain the MSME confirmation. So any supplier which is registered as MSME, you please obtain their relevant Udyam registration certificate and verify the details. In case you as a company are also registered as MSME and have a Udyam registration, then you also like inform all your customers that yes, this is that we are registered as Udyam, this Udyam registered entity, and share the details so that wherever applicable, this compliance can be made. Then in case the supplier has a Udyog Aadhaar memorandum, then they have to mandatorily switch over to Udyam registration by 31st of December 2021, which is in like 8 or 9 days from now. So that also compliance has to be checked. The older registrations of Udyog Aadhaar and the EM2 would not be valid. Nil return is not required to be filed. So wherever applicable, you need to file. Now that train, which is now moves on from this 30th April to the second stop, which is 30th of June, which is in form this DPT 3. This is also, this is a multi-purpose form. One is for return of particulars which is deposit, return of deposit, and also return of particulars which are not considered as deposit. Form DPT 3 is to be filed for both the cases. This you can check in the second point. So there are buttons which are there. You have to select from the drop down menu the purpose of filing this form. This is either for the return of deposit, particulars of transaction not considered as deposit, for both, as well as for one-time return. So when this requirement was introduced, there were two returns to be filed. One was the one-time return from 2014 till 2019, and then there was the annual return. So this accordingly option has to be selected. Auditor certificate, if you are filing for particulars not considered as deposit, auditor certificate is not required to be filed. Then of course one-time return from 14 to 19, and thereafter annual requirement. And nil return even here is not required to be filed. So if the company has any reportable transaction, only then this is to be filed, else nil return is not required. So we will discuss about considering this 30th June, the relevant thing to discuss is particulars not considered as deposit, which is the exempted deposits which are there under section the Companies Act and also the deposit rules. I have made note of certain important points, but of course there are more and would change based on case to case. So here, of course, this net worth is, if you will select particulars not considered as deposit from the drop down, then this point would be in clause number 8 of that form. The net worth as per most recent audited financials for 2021 may be the case that by 30th of June that the audited financials of 21 would not have been finalized. It may happen. So then in that case, the figures of 2020 have to be included here as the most recent audited financials available. Then comes clause 15, which is very relevant for particulars other than deposits. Certain important points, for example, the banking facilities which the company would have obtained, whether it is from a bank, from a public finance institution, NBFC, whether any guarantees obtained, including bank guarantees, whether any bank ODs obtained, overdraft facilities, all such facilities have to be included from any other company. So this is the case of intercorporate deposits, which are also exempted deposits, so that has to be mentioned. Money received against offer made or issue of instruments or bond or NCD. This is relating to issue of securities against the monies received. In this case, if any such is there which is pending allotment, then the same also has to be included. But of course, care has to be taken for section 42 and section 62 of the Companies Act. Any receipt of money against issue of such security has to be allotted mandatorily within 60 days from the date of such receipt. If not allotted, then that money has to be refunded within 15 days thereafter. If not refunded, with interest it has to be refunded, and if not refunded, then it can be considered as a deposit. That is what is provided under the Act. So that care has to be taken. This is of course figures as on 31st of March of the relevant year. That also care has to be taken. The figures as on 31st of March of the relevant year has to be reported here. But this then received from person who was a director at the time of receipt. Another important clause here, at the time of receipt, that person has to be a director. Otherwise, it cannot be considered here. Suppose the receipt is at a time when he was not a director, and then that person was appointed as a director. Then that also the care has to be taken, which amount to be reported and which is to be not reported. Course of business also, whether any advance received or any retention money which has been which is there, so that also have to be reported here. Brought in by promoters in stipulation of lending financial institutions, that also, if there is any such receipt, the same has to be noted. and any amount which is received from whether a mutual fund or a AIF or a real estate investment trust. So all such amounts also have to be included. Of course, this is not exhaustive. This is just an indicative list of important provisions. Then the third stop, which is there for the annual compliance express, is the DIR 3 KYC. This is mandatory for all the directors in all the cases, whether a director or a designated partner. DIR 3 KYC is to be mandatorily done. Earlier to which we discussed, whether MSME or DPT3, they were to be reported only in case where any transaction was there. But this is now mandatory for all. There is two options to comply with the DIR 3. One is the web form, which is the online version, and second is the offline DIR 3 KYC form. Now, if any new DINs are obtained in this year, new DINs in the year, the relevant year for 2021 is 2020-2021, 1st April 20 to 31st March 2021. If there are any such new DINs, then they have to mandatorily file the form, offline form. They have to attach the this PAN number, which is mandatory, passport, which is mandatory for foreign nationals, Aadhaar card wherever available has to be enclosed, residential address proof is to be enclosed. Documents are to be in English language. If the documents are not in English language, then they are to be mandatorily notarized by a public notary. If they are not in English language, then also certified translation by a consulate of foreign embassy. So all those care has to be taken, and this the offline form is to be filed. And if it is a web-based form, then it is the OTP will be verified on mail and on phone, and all details are to be confirmed and then submit. Of course, in the care has to be taken to verify the details. If there are any changes in the DIN particulars, then first you have to change those. Those changes are to be intimated to the NCA in form DIR 6. As per the rule itself, if any change in the particulars of DIN, then DIR 6 is to be mandatorily filed within 1 month of such a change. And then again, of course, DIR 3 KYC can be updated. Also, care has to be taken that whether offline form or online form, the email ID and the phone number has to be unique to all the directors. Same mail and same phone cannot be used for more than one. Of course, for 2021, the due date was 30th of September 2021, and if any DIN has not been completed, then there is a 5,000 rupees fee for filing after the due date. Next, this is another important disqualified directors, which also Snehalji covered in his keynote address. So the first lot of directors which were disqualified with effect from 31st of October 2016 for 5 years. Their 5 years has ended on 31st of October 2021. Those directors are now required to update their KYC, whether web form or whether offline form as applicable. Then those DINs would have been automatically regularized by the NCA. Only requirement is this updating of KYC, which is to be done by the respective directors. Of course, these, as the directors were disqualified, in all the respective companies, the form DIR 12 will be required to be filed now wherever the concerned director is intending to be appointed as a director. As the director was disqualified, the director has automatically vacated offices from all the companies wherein he was associated. This is another important provision with respect to the directors. So, as we saw that this annual compliance train has covered quite a bit of journey over many months. It is 6 months now. We started in 1st of April. Then 30th of April was MSME, 30th of June was KYC, 30th of September was the DIR3 KYC. Now that train has reached a junction stop. As we can see, this is we started off as Mumbai local, and during the way so many companies joined in, directors joined in, and now we have upgraded ourselves to a Tejas Express train. So what happens at a junction stop? Let's understand that. There are certain bogies which are added, whether added as per the requirement. Passengers are added, so bogies would require to be added. Passengers meet the stakeholders. It has been a long journey, so friends, relatives, families would meet. The ticket checker would check the tickets. This would be the stage when the ticket checker will check all the tickets. Tickets are mandatory. Till now, we saw MSME 1, DI, and DPT 3. These both forms, wherever applicable, nil return were not required. But now, this is mandatory. This is a half-time break. The half of the journey is to be done, but there are certain compliances and requirements before proceeding with the second half of the journey. And there is a fork ahead. So what happens at a fork is that there are certain important decisions to be made. Like, कहाँ जाना है actually train को, कौन से direction जाना है. For example, you are at Kalyan Junction and you want to, whether you want to reach Kasara or you want to reach Khopoli, you have to make that choice. Now, how to imply this in the current session, which is on annual filings? Let us understand that all these points. The implication in this case is that with bogies added, I mean the auditor's report, statutory auditor, secretarial auditor, cost auditor. These auditors will give their report, and also board of directors will prepare their board report. Passengers meeting their stakeholders, which would mean in company's case, the stakeholders would be the shareholders, auditors, board, special invitees at the annual general meeting. The ticket checker would check the tickets, meaning thereby that financial statements would be approved at the AGM. AGM is mandatory for all companies. Financial statements are to be approved. Tickets are mandatory, which is all companies are covered here. OPC, of course, there is a separate regime. We will discuss that. Excuse me. There is a half-time break. That means by half-time break for AGM, and there are time limits which are given. There have been extensions as well during last year and during the current year as well. There is a fork ahead. By fork, we mean there are multiple returns which are now due, and based on case to case, the companies have to select whether XBRL filing, whether regular filing, whether consolidated annual returns, whether MGT 7, MGT 7A, MGT 8, and all those. So let's now understand the sequence which would be carried out from this moment. The sequence is that first is the financial statements are prepared and the audit is commenced. Then financial statements are signed by the board of directors. They are sent to the auditors for their report, whether it can be a statutory audit report, secretarial auditor's report, cost auditor's report. They are sent now. Based on this auditor's report, the board report is prepared. Board report is signed and entire set is approved by the board of directors. The annual general meeting is convened. Approval is obtained at the annual general meeting, and thereafter annual returns are filed. So we discussed these. Let's discuss now in brief this which is known as the board report. It is basically what I have done is that I have noted few important points which are to be mandatorily covered in the board report, and I have given a bit of a checklist or a remark based on the documents which are required to prepare a board report as per the applicable provisions. So the reference section is section 134 subsection 3 and rule 8 of Companies Accounts Rules 2014. First part for preparing the board report is the state of company's affairs. Very important. So board report There are two ways. So one way you can consider board report is just another a report. Okay, ठीक है, जो भी checklist है हमने दे दिया. But if we look at detail, we will check up the points as well. It is basically, I would say, a summary of all corporate actions which the company has undertaken in the previous year. It is summary, and we will check how and what all details are required. First is the state of company's affairs. It is basically an extract of the financials which are to be put here, whether it's the performance of the company, whether it is the profit earned, the balance sheet position. The extract has to be given. The financials and notes to accounts have to be checked for that. A note on company's performance. So basically, this is the point where whatever information which the board of directors intend to give to the shareholders have to be included in this clause. So note on company's performance, any information which the company wishes to share with the stakeholders, and of course including key financial parameters, which is like an extract of the financials. Material changes, if any material changes affecting the company during the relevant year under review, then the same has to be mentioned here. Dividend, the provisions relating to dividend and also the compliances have to be checked. Whether it is declared, whether it is transferred to a separate bank account within 5 days of declaration, whether dividend is paid off to the shareholders within 30 days of date of declaration. All those compliance have to be checked and details have to be filled. Reserves, the reserves and the amounts transferred to reserves will have to be mentioned. Of course, the same details are there in the financials and notes to accounts. So those details have to be checked. Each reserve has to be mentioned separately, and of course opening so that's what basically each reserve has to be mentioned separately, and details would be in the financials. Then the auditors, which are statutory, secretarial, cost auditors, care has to be taken. All whether appointments or changes or casual vacancies, all details have to be mentioned during the current year. For whether it is statutory auditor, secretarial auditor, cost auditor, internal auditor, all details, and also auditors' responses to comments which have been made or qualifications which have been made by the auditors. So those responses also have to be discussed and have to be included in the board report. Board of directors and committees, very important point. All changes in the board of directors and the key managerial personnel are to be included here. Appointments, resignations, removals, change in designations, all details. Whether any rotational directors, and say that also has to be included. Rotational directors reappointed or not reappointed, all directors, basically all details of changes in directors and KMP have to be included. Composition of the committees have to be included. The same, of course, can be checked through the minutes and resolutions which have been maintained. The attendance sheet which has been maintained, which director or which member has attended how many meetings. Then the declarations by independent director, of course, as per section 149 subsection 6 of Companies Act, as applicable, has to be checked. Frauds as applicable, if any frauds have been reported by the auditors under 143.12, that has to be reported. Particulars of loans or investment under section 186. So again, financials and notes to accounts would contain this information. Resolutions authorizing such a transaction have to be checked. Entries in registers have to be checked. It's all a part of good corporate governance, as we discussed. The contracts with related parties, of course, the disclosures in financials would be there as per AS 18. So that same has to be checked. And under section 188, so whether new authorizations have been obtained by the board or by the members as applicable, the same has to be checked. And there is this AOC2 return, which is the details of related party, which has to be included. Joint venture, subsidiary, associates, such details have to be included. If there is any change or if there is any company which has ceased to be a subsidiary, joint venture, associate, then same has to be included. There is also a summary of the performance of the financials of subsidiaries which are to be included. Extract of annual return MGT9, as we discussed, it has been withdrawn. MGT9 has been omitted. The annual return has to be uploaded on the website. So probably like we used to have in the old Companies Act 1956, that there was a separate document of annual return which used to be attached to this Form 20B, if I'm not mistaken, so, long back. So that same way, something probably that Excel file or Word file can be approved by the board at the board meeting with the financials, and the same can be uploaded on the signed offline and can be uploaded on the website. The board report, the policies relating to directors' appointment, whether CSR or risk management policy, the POSH policy, as applicable to the company, have to be checked. Now here, the one thing which is to be checked is the relevant act as well. For example, for POSH, we have to check the Sexual Harassment of Women at Workplace Prevention, Prohibition and Redressal Act 2013, referred to as the POSH Act. Under the POSH Act, there is a Constitution of Internal Complaints Committee which is required. So all those provisions have to be followed and accordingly disclosed here. The extract of the policies have to be disclosed. Of course, CSR applicability, we have discussed the FAQs in detail about CSR. So there is a new format for CSR annual return which has to be disclosed. The committee form, the outline of policy, the working, how we have derived at the figures, amount which are spent, amount which are unspent, and how they have been dealt with, whether they have been transferred, whether there is any ongoing project or whether they have been transferred to Schedule 7 fund, whether if there is any entity, if spending has been through an entity, then that the annual CSR1 form has been filed. It's not the annual form, I'm sorry, it's not the annual form. It is a one-time form, CSR1, wherein such entities have to register whoever are providing CSR services, CSR activities basically. So all those things have to be taken into consideration and checked. Of course, as we discussed earlier, the notices under Section 135, as Snehal discussed, they have the companies are receiving such notices, and also in the upcoming this version 3 of the new MCA portal, there will be a e-adjudication portal in that. That might be like such notices might be there. There would be online hearings. Of course, there are many changes proposed in the new version of the MCA version 3.0. Already in this year, there is a new revamped home page which was introduced, and there are further like amendments and updates on the portal which are there in the pipeline. So we will wait for the same to be officially introduced. There is also a disclosure relating to conservation of energy, technology absorption, foreign exchange earnings, outgo. The steps taken have to be made. Again, whether in the report or as an annexure, the same has to be disclosed. Whether formal evaluation of board has been taken up. So this is applicable for listed companies and public companies with paid up capital up to rupees. Not up to rupees, for listed companies and public companies with paid up capital more than rupees 25 crores. Whether deposits are accepted during the year, then if so, then the details are to be given, and also if any defaults are there in repayment, then the same has to be disclosed. Maintenance of cost records, cost audit, wherever applicable. If not applicable, then disclose. This another care has to be taken that this checklist which is there, this section 134 subsection 3 and rule, this acts as a checklist. So whatever disclosures are mentioned in this section, they are to be mandatorily disclosed in the board report. We cannot tell that अरे ये तो applicable नहीं है, हम तो नहीं करेंगे, छोड़ो ना, जितना है उतना डाल देवे. That can like lead to trouble. So Wherever not applicable, you make the disclosure and then you mention specifically that this clause is not applicable. So that is one. And of course, there is a director's responsibility statement which is to be included, which says that the applicable accounting standards have been followed in preparation of the financial statements. The adequate care for safeguarding of the assets have been taken up. Accounts are on going concern basis. The devised system are the devised system to ensure compliance and operating effectively. They are operating effectively. The systems devised to ensure compliance are operating effectively, and wherever applicable, the internal financial controls are effective. These disclosures are to be made. Now, this was for general checklist for all the companies. But as we discussed in the earlier part of the session, that there is a separate regime which is introduced for small companies and for OPCs. So let's discuss a bit about that. Definition of small companies, which we discussed in the earlier part. This amendment was introduced in the budget speech of 2021, and the limit has been significantly increased. As we can see in this table, the new limits, the paid up capital up to ₹2 crores would be considered as small companies, and turnover up to ₹20 crores would be considered as a small company. There are many relaxations which are provided for a small company, and this is basically to promote ease of doing business and to help the companies to reduce the burden of compliances on such like MSEs and small companies. So one such relaxation for small companies is this, which is the abridged form of board report for small companies and for one-person companies. Also, one-person company, there is a separate regime, and there is very important amendment which has been made in this year in the budget speech and thereafter by notifications. That amendment includes that now whether a person is residing in India or not, if it is an Indian citizen, he can incorporate a OPC in India, which now means that even non-residents can incorporate one-person company in India. It's a major boost to the Make in India campaign, or also to the Atmanirbhar Bharat initiative, and also to the initiative of Go Vocal for Local. This is what has been done to promote entrepreneurship in India. And also the requirement of staying in India for such a member has been reduced. Earlier it was 180 days in a year. It has now been reduced to 120 days. So these two important amendments for one-person company. So we discussed the board report in detail. For this is now the abridged form of the board report, where certain disclosures are not required. The required disclosure for small companies, OPCs, are the state of company's affairs, financial position, material changes, if any. We have discussed that. The web address for annual return, the number of meetings of the board, the director's responsibility statement, of course, annual return, which is to be uploaded on the website, and the NGT 9, which has been omitted. Number of meetings have to be taken into consideration. So for small companies, are required to only the board of directors of small companies are required to meet only 2 times in a financial year, with a gap between 2 consecutive board meetings of more than 90 days. So that has to be taken into consideration. Then the disclosure with respect to fraud reported by auditors, if any, the board's explanation to the qualification or adverse remarks by the auditors and disclaimers made in the auditors. Then also change in the directors, which we discussed, any material orders passed by the authorities, and of course the POSH committee, wherever applicable, whether it has been duly constituted. So as we can see, this does not require any disclosure for CSR, whether for remuneration to the directors, whether for technology absorption, foreign exchanges. All these disclosures are not required. So it is an abridged format of the board report, and which is for small companies and OPCs. So next in line of sequence is this convening of annual general meeting. Once these audited financials are there, we have prepared the board report. Now we have to convene the annual general meeting to approve the board report and the financials. So the limits specified under section 96 subsection 1 are that if it is a first annual general meeting of a company which has been incorporated during the year 2020-2021, it will be the first annual general meeting, and the due date for the same is 31st of December 2021. That is 9 months from the close of the relevant financial year. Next AGM. So every subsequent AGM, the due date is 6 months from the end of the financial year, relevant financial year. So for 2021, we can consider 30th of September, 6 months from the close of financial year, and gap between two annual general meetings less than 15 months is the third criteria. Now, pursuant to circular, as we discussed, this the ROC has given a extension only for 2021. This extension is there for the time period for convening AGM by 2 months. 2 months extension has been given. Previous year, 2020, this extension was for 3 months till 31st of December, subject to these conditions. For this year, it is for 2 months. So these two being exceptional years, the due dates of annual general meeting have to be taken in, have to be kept in mind while filing of annual returns. Very important point to note. So once all this is done and annual general meeting is held and for the accounts and board report is approved, now the compliance express can move on and reach the fourth stop, which is the filing of financial statements. Here, so there is a separate regime for other companies and there is a separate regime for a one-person company. We will discuss both. The audited approved financial statements is to be filed with the registrar of companies within 30 days of the date of annual general meeting. This is provided in section 137. Form AOC 4 is for standalone financials, and wherever applicable, the consolidated financials, and AOC 4 CFS is there. The companies which are required to file XBRL AOC 4, which is the taxonomy as applicable, whether the accounting standards or the Indian accounting standards, which is for mandatory for listed companies and their subsidiaries. Any companies with paid up capital 5 crores or more and turnover of 100 crores or more. So any of these conditions are fulfilled, then the companies to file their this annual filing in XBRL form. And then this taxonomy is to be attached with form AOC 4 XBRL and to be filed. Now, certain points to remember in AOC 4 as well, very briefly. And now the details of AGM held, which is very important, I would say, for especially for 2020 and 2021. The extension circulars are to be kept in mind for this AGM, and accordingly the date of AGM and the due date has to be mentioned. Very important. The details of holding subsidiary companies have to be checked, the same as per board report, what we have discussed, the same has to be mentioned in this form. Details of auditors, the SRN of ADT1 file have to be included. So that also has to be checked with the ADT1 file and the relevant SRN, the membership number, the details, the contact details of the auditors have to be included. The financial statements have to be put in, and different parameters as contained in the form have to be mentioned. The details of directors and KMP who have signed the financials. So this section 134 subsection 1 has to be kept in mind, and accordingly details have to be put. Share capital particulars during the year, whether any fresh issues made or any changes also have to be included. Principal products or services details have to be included, and of course the extract of CSR spent during the year as applicable has to be included. The related party transactions details have to be included. Of course, the details would be there wherever applicable in the notes to accounts, as per AS 18 and in the board report as per section 188 of the Companies Act. The name of the related party and the relationship is to be included. The nature of contract or arrangement with the related party is to be included. The duration of the contract, each contract separate duration is to be included. If any amount is paid as advance, the same to be included, and of course the date of approval by the board is to be also included here. Auditor's report and CARO disclosures have to be kept in mind. If any qualification disclaimers made, then same has to be included. And for CARO disclosures, there are separate drop-down menus for each item. So the same has to be selected, whether it's a favorable remark, unfavorable remark, whether it's an adverse remark or a disclaimer of opinion or not applicable. So from drop-down menu, the same has to be selected. And in the attachment, you have to include the entire financial set, whether board report, auditor's report, the financials and notes to accounts. The AOC 2 has to be included wherever applicable. AOC 1 has to be included wherever applicable. This CSR policy annual return wherever applicable has to be included as the attachment. Then this points to remember, this is that up to for 2021 only, exclusively for this year, up to 31st of December 2021, there will be no levy of late fees. So filings can be made irrespective of timing of AGM. Till 31st of December, the late fees would not be levied. Otherwise, if any delays are there, then normal late fees which are levied by the MCA is 100 rupees per day. Of course, this does not include the penalties which are prescribed under the Act. For a OPC, so this again, for a OPC, there is a different due date. This is for companies, which is that 30 days from the date of AGM, this has to be filed, which is the normal. But for 2021, the due date is up to 31st of December without levy of any late fee. For OPC, the due date is within 180 days from the end of the relevant financial year. If we consider 31st of March, then 180 days comes to around 27th of September of the relevant year. So that is the due date for OPC, because a one-person company, being a one person, is not required to have an annual general meeting. The member can sign the financials and the same can be filed. But again, as per the general relaxation, this 180 days has been also, this relaxation has been given till 31st of December 2021, only for this year. For XBRL filing, the tagging is to be done as per the applicable taxonomy, and same is to be pre-scrutinized and uploaded with this. So that is what we have discussed. Then comes the mini stock, which is the MSME half-yearly return for first half of 2021. 2022. We have discussed in detail about the MSME return. Only thing different would be the relevant period now would be 1st April till 31st of September of the relevant year. Again, nil return is not required to be done. Next comes the stock which is for annual return, stock number 6. This annual return, whether MGT 7 or MGT 7A for a small company or OPC, accordingly the same is to be filed. The governing section is section 92 of the Companies Act. The due date is normally within 60 days from the date of the annual general meeting. Of course, for 2021, the due date, like till 31st of December, the late fee would not be charged. For this, okay, so that we have discussed. Some brief points to be kept in mind for annual return MGT 7 are the first thing which is entered is the detail of the company, detail of AGM held. Very important point again for 2020-2021, considering exceptional years. The details very carefully have to be included. From AOC 4, so the detail of the date of AGM and the due date has to be the same as what has been entered in AOC 4. If there is any discrepancy in that, then the form will not be pre-scrutinized. So that has to be kept in mind. Business activity has to be included. The holding subsidiary companies, joint venture companies have to be included as per board report. The share capitals of the company, the details of holdings, shareholding, promoter holding, KMP holding, all of this, including ISIN number wherever applicable. If any transfers are there, then those details have to be included, and also a separate statement of transfers have to be included wherever applicable. Detail of debentures and securities which are outstanding have to be included. The turnover detail, net worth detail are to be input as per the latest financial statements. The composition of the members, directors, KMP, the number of members on board, KMP on board, directors on board, with the with the classification as well have to be included. Details of details of meetings, very important point. The same is to be checked with the minutes, with the registers. All committee meetings, board meetings have to be included. All general meetings, whichever held during the year, have to be included. Attendance also has to be checked from the minutes, from the attendance registers, and the same has to be included. Care has to be taken that all directors have to mandatorily attend at least one board meeting in a year. If any director does not attend minimum of one board meeting in a year, that director automatically vacates the office by operation of law. Point to be kept in mind. Details of remuneration paid to directors, KMP, have to be included. Whether all applicable compliances have been followed has to be checked. Whether any punishment, penalty, adjudication has been levied during the year under review, the same has to be checked. And certification by a company secretary or a practicing company secretary or MGT8, wherever applicable, has to be checked. Of course, as an attachment which we discussed, that one is the list of shareholders and debenture holders, list of transfers which are to be included as attachment wherever applicable. MGT8, wherever applicable, the certificate from a practicing CS. This certificate is applicable to all listed companies and also to companies with turnover more than 50 crores or a paid-up capital more than 10 crores. Such companies have to mandatorily provide this CS, the PCS certificate under MGT8. And of course, annual return, which we discussed about this, the attachments, and this MGT7A is an abridged version of this annual return, which is applicable for one-person companies and for small companies. And this is the disclosure is more or less the same, but it does not contain disclosure pertaining to certain certification of compliances, whether CSR and these details. Because for small companies, as we discussed, there is a separate regime. For small companies, the compliance forms which are there, MCA compliance forms, are not required to be certified by a practicing professional. So therefore, this certification clause has been excluded. As we discussed about the MGT8 certification, so certain brief points wherever applicable, then this would be there. The MGT8 certification would include whether records, registers, forms have been maintained by the company, whether the meetings, wherever applicable, have been convened as per provisions of the Act, the secretarial standards, the rules therein, notices have been properly given, whether there are any loans to directors, the same has to be disclosed, whether any changes in capital has to be disclosed in this certification, dividend, whether all compliances have been followed with respect to payment and declaration of dividend, whether signing of financials has been as per the Companies Act and applicable provisions, appointment, reappointment, casual vacancy in office of auditors as well as in the office of directors, the same has to be included. Any acceptance of deposits, like applicable compliances, whether have been followed. So basically, this we can see that it is a checklist of all major compliances which would be applicable, and whether the same has been followed or not. Whether it is the charges, whether they have been properly registered, loans, investment guarantees under 186 section. Whether there is any alteration during the year for MOA, AOA, the same has to be checked. And of course, the auditor's appointment, which is also to be checked. The provisions of section 139(1), 139(2) have to be checked. If there is any casual vacancy, then also the same has to be checked and applicable provisions have to be followed. ADT1 is to be filed within 15 days of appointment. So in case of a casual vacancy due to resignation, then the auditor is appointed by the board, and then in the EGM that appointment is ratified within 3 months thereof. Auditor is appointed for 5 years subject to rotational conditions under section 139 subsection 2. There is a qualification certificate of auditor's intimation consent qualification which is to be mentioned, which states that the auditors are fulfilling the criteria under section 141. That the auditors are eligible to be appointed, the appointment is within the limits prescribed, and whether there are any proceedings initiated against the auditors. ADT1 is to be filed for with all the auditors' details, and as we discussed, the SRN of the ADT1 is to be included in AOC Form. So this is a brief summary of all the disclosure deadlines and the various stops of the compliance express that we discussed. 30th for April is the MSME 1 form. 30th June is the return of particulars not considered as deposits. 30th September for this year is the DR3 web KYC. 30th October is AOC for companies which have the annual general meeting on 30th of September, then 30 days thereon. And 60 days after within the annual this annual general meeting, which is 29th of November, is the MGT7, and of course the MSME 1 second form for which is 30th of October. For year ending 31st of March 2021, the due dates are 31st of December without payment of late fee. Now, very quickly, we will also discuss the LLP forms. There are only 2 forms, annual forms, which are currently applicable to LLPs. Of course, as we discussed at the start, and Snehal briefed us that this bill is under consideration to make other compliances also applicable to LLPs. So we'll get to know once it is notified and once the blueprint is there. Currently, this is Form 11, which is the annual return of LLPs, which is to be filed within 60 days from 31st March of the relevant year, that is 30th May for 2021. 30th May is a normal due date, but for 2021, considering exceptional time, the due date was extended to 31st of August 2021. Very briefly, the details of partners and designated partners are to be included. The contribution which each partner is to be given here, the contribution by each partner, number of companies and LLPs wherein the concerned partner and designated partner is associated. The same is also to be attached as a separate attachment also wherever applicable. Detail of penalty imposed if any, and if contribution is more than 50 lakh or if turnover is more than 5 crore, then this form is to be certified by a practicing CS, else the certification is to be done by the designated partner. So this detail is to be kept in mind, and if there is any change in the designated partner, then first of all, Form 4, which is applicable for such change, that has to be checked. Whether any changes in the deeds would be required, then the same is to be executed, the deed, due to any changes in partner, designated partner. So first that compliance is to be completed, and then annual return is to be filed. This has to be kept in mind. And last but not the least, it is LLP Form 8, which is Statement of Solvency for 2021. Again, the due date 31st of December 2021. Normally, it is within 30 days from the end of 180 days from 31st of March of relevant year, which is normally 30th of October. Audit for LLPs is mandatory if turnover is exceeding 40 lakhs and contribution is exceeding 25 lakhs. Audit is mandatory, else audit is not required. As we discussed earlier, statement of dues to MSME is a mandatory attachment in Form 8. This has to be kept in mind. All relevant particulars of this financial parameters have to be included, And if these forms are not filed within due date, then late fees would be levied at ₹100 per day for each day of delay. So with this, I conclude this presentation on the this annual filings and also for the relevant updates under the MCA. And I hope this has been useful. This has been a very it is a heavy deadline period for professionals, and thank you for taking time out and to participate in this session. And over to you, dear conveners.
Thank you, Raj bhai. It was really an excellent, I would say, presentation and the informative slides, which will be definitely helpful to our members. And there are two questions asked by our members. I just read out. First one is, if there is MSME charging the GST but fails to comply GST output liabilities, leads to loss to the company. How companies secure itself for such loss and do the MSME compliance?
This is the query is under GST or query is under MCA. So that has to be
look
checked.
Like a GST query.
So that we can answer separately. The concerned member can send on mail and we can then take it up because it is separate query. Yes, sir.
Second one is where we should show margin collected from client for executing trade in case of broking company. This is also, I think, not much relevant to this topic.
So the same can be discussed offline. Yes, sir.
Members, it was really a good session, I would say. And I request my colleague, CA Ravi Soni, to present a well-deserved vote of thanks to Raj Kapadia, who has taken both the sessions. It's a good sessions. Over to Ravi.
Thank you, Hiren bhai. It is my great pleasure to give well-deserved vote of thanks to our learned speaker, CS Raj Kapadia. I think everyone would agree with me that CS Raj Kapadia has very briefly covered the topic of various ROC annual filing return and various deadlines. CS Raj Kapadia has wonderfully covered the various forms applicable to the company and also pointed out the various points. Special care we have to take care while filling up the forms. I think which would be very helpful to our member. I, on behalf of Borivali Central CP Study Circle and its member, would like to thank CS Raj Kapadia and request everyone to give him a big round of applause to him.
Thank you. Thank you very much.
Thank you very much,
for
sir,
your
for your time. Thank you.
Can end the session. Okay. Bye, sir.
Yeah,
Yes,
bye.
bye. Take care.
Thank you. Bye.